So first of all, many thanks for having me. So many thanks for the invitation. Actually, it's been quite a while because I was invited originally, I think, before the pandemic. So over time, it was postponed several times because it was not possible to meet physically. So finally, it's coming in place. And originally, actually, I was targeting slightly different, maybe speech. Now the situation changed. So let's have a look. What are the main challenges and where we stand in terms of the economic development and what the industry will be facing in upcoming time. So let's kind of come back to pandemic. So we had pandemic crisis, which I would say we are kind of getting out of it. And we haven't seen any really that much severe impact because there were extensive measures in terms of accommodative monetary policy, but also and especially in terms of fiscal measures. So all those measures kind of sustain the impact of the crisis, and we went through the crisis quite well. However, that's a good news, but let's say bad news is that the fiscal and monetary space has been substantially reduced. So basically I would say we have less maneuver for the next crisis. And also there is kind of less resilience of economic resilience in this respect. Now, if you look at the prices of financial markets, so it has been more or less sustained, broadly recovered over the first year of pandemic. So if you look at the drop, March 2020, so it was quite substantial, but after this, the market recovered relatively quickly. And also, especially due to those measures mentioned. Now, this goes at the same time with a clear trend for digitalization, for also for green transition. So this is something that should not be forgotten and has been even further intensified. So in terms of digitalization, clearly cyber risk is one of the most important now, also with the current development. And also now more extensive work from home has also some implications. So during the COVID, we all worked online extensively. Now the question is to which extent we go back to normal. So what is the new normality now? And those aspects has to be taken into account because we might not go completely to pre-pandemic. So basically there is also some implication on commercial, especially real estate prices. So now that was one crisis. And that's basically something what I was planning to say originally, but then March 2022 came and, sorry, actually February already. So 24th February, and we had the invasion of Russia to Ukraine, which again changed the landscape, changed a bit the setup. And we had already before that, we have quite high numbers in terms of inflation. So inflation was going up on the back of quite positive development in financial markets, especially equity market. And inflation was driven mostly by energy prices, but now, of course, with the crisis, it's further kind of spill over also to other segments of the economy, so it's something that we need to take into account. And also, there is a change of stance of monetary policy, because now we do not basically use anymore accommodative monetary policy. We have to look at the inflation. So the monetary policy, in fact, is in difficult situation because on one side, you have quite high inflation, so you need to act. On the other side, there is a risk of stagflation, so there is a risk that growth will be really low. And at the same time, we see that we are kind of getting out of the low yield environment. So I would say if you look at where the yields are, we are not anymore in this ultra low yield environment. So the yields are not, let's say, crazily up, but we are kind of getting back now to somewhere around 2013 yield curve. And that's all needs to be again taken into context of this green and digital transition, which I mentioned, and also demographic trends. So this will shape also the industry. This will shape also the insurance sector, basically the whole financial sector, but yield curve especially and inflation will have huge impact on the insurance sector. Now, what is the economic outlook? So what is the prospect? If you look at the inflation numbers, the latest inflation figures, April inflation 7.4 in euro area, with the core inflation 3.5. So you see that even core inflation is substantially above the inflation target. And if you look at the latest European Commission forecast for 2022, so the growth is quite down, basically from originally foreseen 4% now to 2.7% for 2022, and the inflation was revised even to 6.1%. And this is 3 times higher than target in euro area. And if you look at projection of European Commission, which is also using kind of adverse scenario, so what can happen in case that there would be disruption to natural gas import, so what would happen with the economy. So in this, let's say, more adverse scenario, and this is not an unrealistic scenario, this is something what we have to be all prepared, the growth might be basically very close to zero. So we might grow maybe 0.2%, but 0.2% might be also minus 0.2, you know. It's very close to zero. So it is very close to recession. And with inflation almost 10%. So we are like very close to stagflation scenario, which we need to take into account in our further consideration. And of course, this will depends on further development. So there are different types of scenario. We consider the more severe one. We might probably have inflation in double-digit numbers. So basically, you already see now that in some countries inflation is in double-digit in Europe, and this might further deteriorate. Now, going back to European insurance sector, what are the main risks? So the main risk is in the real economy. This is quite clear. So the main risk is on macroeconomic front. The real economy, that's the part where we have to be kind of the most cautious about, and we need to take into account in our further projections. There are also other risks which might grow in, let's say, longer horizon. So credit risk, market risk, with all this development might be the potential grow as well. And of course, ESG risk on longer term and digitalization, that's something that definitely will stay with us for a long time, and this will be quite with increasing focus. So I was mentioning the crisis in basically Russian invasion of Ukraine, which is some kind of central part of our attention now when we are looking at the outlooks and where the market might be. And in this respect, it's important to see what are the exposure of the insurance sector. Now I'm talking about the European insurance sector. And we see that exposure are quite limited, so very small direct exposures. So that might bring us some optimism that maybe this crisis will not be that severe for the sector. But at the same time, we should not neglect the second round effect, because the fact that we are not that much exposed in terms of the insurance sector, even if you are looking at some further activities of the European insurance, like subsidiaries, it is still quite limited in terms of direct exposures, broadly speaking, for all European countries. Of course, there might be some exception, but the second round effect from other part of financial sector, that's something what might be much more significant. So, for instance, banks are much more exposed to Russia than insurance. However, it's still relatively small if you look at the total assets, but there might be further spillover, and especially from the real economy. So this is more about the real economy now, and this crisis might be quite different from the one we experienced during the pandemic, which in fact we are not completely out of it. We also need to consider the situation in China, for instance. So that's also something that need to be faced in, and that's something that we need to consider. Now, looking at the position of insurance sector, so now looking at the European insurance sector, so solvency position are quite robust. So across European countries, so we see very high SCR ratios. Also, thankfully, we have Solvency II framework, which kind of ensure a bit the certain stability and consistency across Europe in this respect. And we saw a bit of decline during the pandemic of especially life insurance SCR ratio, but let's say this decline was from very high level. And now we see even in the end of 2021 that SCR ratio recovered, basically improved for life, kind of more or less stable for non-life, slightly went down, but it was before even improved. So very high capital position. Of course, here in those figures, which now I'm showing, we do not have the current crisis, right? So there might be still some impact, but we are on average median somewhere above 200, so we have quite comfortable buffer, which might be needed actually in the next crisis. So it's good that we are in this situation. So the situation. Okay, thank you. So the situation is quite kind of good for the sector in terms of the initial position. Where we need to be especially cautious is inflation. So inflation figures is something that we need to pay attention. We see that inflation is moving up. Now the question is how inflation impacts the sector. So on one side, we have non-life insurance, which might be impacted via climate inflations. So basically, we have these guarantees, non-life guarantees, which are in nominal terms. At the same time, life insurance are typically, the benefits are set up in the beginning of the contracts, and they are, liabilities are in nominal terms, so not that much affected, but non-life insurance might be much more affected in this respect. In the same time, we need also to take into account where the interest rates will move, so what would be the impact of interest rate. So then it depends in terms of capital gains versus in respect to negative duration gap and inflation, claim inflation. So how these things will interact, what will be stronger. With inflation, what we need to be careful that if we are just looking at the inflation measured by consumer price index, that's not exactly what is corresponding to claim inflation, right? So there are many studies actually showing that claim inflation might be higher than the general inflation. So this is something also what we need to take into account. And what for non-life insurance, what is important to look at, what is the periods of claim settlement. And here, one could say, okay, non-life contracts are typically for 1 year, so we can adjust quite quickly. But if you look at the inflation, at claims settlement period, so duration of claims, 55% of technical provisions have duration longer than 2 years. So it is not within 1 year, okay? So here, again, we need to take this into account that some claims are having much longer settlement than 1 year. And now, let me kind of finish with looking at asset allocation of insurance. So where do they invest? So traditionally, they have a lot of government bonds, corporate bonds, so a lot of fixed income assets. Equity, we see over kind of couple of years already with the low yield environment that equity is growing. In terms of share, it is still compared to fixed income assets much smaller, but it is growing. We see also some increase in properties. Despite this is not direct holding, usually it's property via investment funds or mortgages. And we see also some other investment, but they are relatively small compared to other main category. So for equity, we have unlisted and listed, both growing. Now let me a bit focus on real estate holdings. That would be kind of my last point to make, because this is kind of category which will be growing in importance. And we see that there is an overall long-term trend in terms of insurance going into this segment, not kind of dramatically, but we see gradual increase. And this is the segment which might be affected potentially by the crisis, especially commercial real estate, but also by the digitalization, and by also green transition. Because if you look at the recent Commission proposal of revision of the Energy Performance Building Directive, so it's clearly shown that there might be some impact, because some additional expenses might come for certain real estate, and there will be some compulsory expenses for renovation. So those which will not be renovated might potentially kind of decrease in price. Those which will be renovated might have some future energy saving, but at the same time there will be some costs. So there might be some impact on prices. So this is something what again we should factor in. And if you look at the European composition of the housing, and this is for both commercial and residential, you see that we have many countries where houses are quite old. So you can assume that they will need quite massive renovation in some cases. So you see that around, let's say around 50% of all buildings are somewhere, let's say late 70s, beginning of 80s. And that means that they might not be in line with kind of the latest requirement on energetic performance of the buildings. So this is again another topics to look at it. So basically, to conclude, a lot of challenges in front of us. So we will definitely face many challenges in terms of the real economy. The outlook is quite uncertain. We have very high volatility. potentially also having some impact on derivative markets where insurance are using to hedge their position. Fortunately, they don't have basically any derivatives or very limited derivatives related to energy prices, but they have derivatives to hedge for interest rate risks. Inflation numbers, this is something that definitely we need to factor in our assumption for further development in the market. We don't know where we will be in terms of further economic outlook, whether we really will go to the recession or we will manage to stay at, let's say, positive growth, despite probably it will not be very high. And this all will be needed to kind of factor in for our assumption about further development in the market. So I would stop here. Thank you very much for the attention. Now we can have also some time for questions, so happy to answer your question. Thank you very much.
Thank you, Petr. Sunt întrebări? Some questions for Petr? Well, until you think a little, I would have a simple question, well, simple for me. We are in an insurance market dominated clearly by non-life and moreover by motor insurance, which is already non-profitable for us. In this claims inflation situation, what should insurer do? Because it's a very little place to play with tariffs. So, and what will, in the end, the customers feel? What will be the impact on them?
Yeah, it's of course not easy solution. So definitely we have to consider this for pricing. I mean, in the market, it's of course not easy to increase prices so easily, and also considering the competition. But at the same time, the prices are moving up across the whole economy. So it's not only about insurance. I mean, the consumer already feel the pressure from for their daily life. So everything is in terms of pricing moving up, and of course this is not good news for consumers, because they will need to pay more. That's clear, and they will feel this crisis probably much more than the pandemic. Also, fiscal support will probably not be possible to make that massive. It's also a different situation. Before we kind of have this disruption of certain businesses, so we had to kind of ensure that certain businesses might still continue despite the situation. So it was kind of not really influenced by, or let's say the entrepreneurs could not do anything about this, so there was need for this support. But now we are in kind of real economic crisis, so it's a different situation. So you cannot assume that there would be, you know, someone providing free money here. So consumers will need to be prepared for kind of more downturn, and definitely it will be more costly. But of course it's not easy for the sectors, but they need to consider to revise pricing. That's clear.
Are your expectations different between the Eurozone and the out of it? Because this region, most countries are not part of the Eurozone.
Yeah. Yeah, I mean, what we can already see now, the impact on, let's say, non-Eurozone country, it's especially those countries in this area, so let's say Eastern, Southeastern country, it's much higher, and they will feel this situation much more. So if you look at inflation figures, they are already in many countries, kind of Eastern countries, they are already in double digits. So the impact is much more severe. Also in terms of economic growth, so in terms of how economy is set up, typically those countries are more dependent on Russian gas, Russian oil. They are also more sensitive to any economic downturn because many of Eastern countries, they are heavily depending on export, so they are export-oriented countries, and if core Eurozone country will not grow, I mean, the export will go down as well. So basically, the advantage of Eastern countries is that they can grow faster than, for instance, Germany, but they can also their economy can also decline much faster when there is some adverse situation. So definitely here you will face probably more challenges than in core Eurozone countries.
On this optimistic note, may I ask you, there are any other questions? If not, thank you very much, Petr. Thank you for being here today. And we will go back now to the Romanian business.
Thank you very much.
Sergiu, please.